Recently, a wave of excitement has surged through the crypto community following a series of sensational claims regarding XRP, Bitcoin, and Ripple. According to a widely circulated video, the CEO of Ripple appeared on live TV and confidently predicted that XRP would not only surpass Bitcoin in value but that Bitcoin itself would exceed $200,000 by the end of the year. This statement was paired with another explosive revelation. The U.S. Federal Reserve has allegedly approved XRP for official payment use, and Ripple has already donated $10 million to the federal government to kickstart the implementation process. Ripple's CEO is said to have reaffirmed this development, leading to dramatic price predictions. The channel reporting this, CryptoKey, claims that XRP will skyrocket to $1,359 after a long-awaited legal settlement, which could be announced within 48 hours. From there, the price could climb to an astonishing $15,729 upon relisting on all exchanges, and ultimately surge to $59,238.21 following Ripple's integration into the global central bank digital currency, CBDC, ecosystem. The immediate focus is on a projected price of $2,940.34, supposedly tied to Ripple's upcoming IPO and new partnerships with major banks. Additionally, it's claimed that ProShares Trust is preparing to launch an XRP ETF on April 30, 2025, which is expected to fuel a price boom. Reports also suggest that in some international markets like South Korea, XRP has already reached a price of $50.17. The video further promises viewers up to $100 in free XRP by completing a series of steps involving liking, subscribing, and signing up through a referral link, raising red flags about the legitimacy of the entire story. Though such claims stir massive hype and bullish enthusiasm among fans of XRP, it's important to approach them critically and verify all information through credible sources. Much of the narrative includes exaggerated or unconfirmed statements, speculative forecasts, and marketing tactics typical of promotional content, making it vital for viewers to distinguish between genuine financial news and sensationalized content designed to drive engagement or referrals. More than a decade ago, the Winklevoss twins were denied approval for their plan to launch a Bitcoin exchange-traded fund, ETF, facing a firm rejection at a time when the idea of regulated crypto investment products was still seen as too risky or unproven. Fast forward to today, and the landscape has dramatically shifted. Now, there are numerous Bitcoin ETFs already active, and just this week, we've seen the launch of an XRP ETF, although it hasn't yet begun trading live in the United States. That said, there have already been 11 separate applications submitted in hopes of securing approval for live trading in the US. While American investors are still waiting, people in other parts of the world already have access to these types of products, marking an important milestone toward better regulation and accessibility in the crypto markets. Adding to this momentum, we recently spent $1.25 billion to acquire Hidden Road, a prime broker that strengthens market infrastructure and allows major institutions like BlackRock and leading Wall Street firms to enter the crypto space with a level of safety and scalability they're more comfortable with. A more secure and better capitalized prime broker enables the clearing of large trades and brings legitimacy to the market, something that benefits not just crypto, but the entire financial ecosystem. In terms of broader economic forces, discussions around cryptocurrency often intersect with global trade tensions and currency volatility. Bitcoin, for example, has been viewed by some, including Larry Fink, who said as much on this network about a year ago, as a hedge against weakening fiat currencies, particularly in times of international uncertainty. Though that theory hasn't fully materialized, recent currency movements like the dollar hitting a 3-year low against the euro and a 10-year low against the Swiss franc have pushed crypto prices upward, albeit with continued volatility. The truth is, no one has a perfect explanation for what drives crypto prices. They're influenced by many of the same factors that drive traditional markets, along with unique crypto-specific dynamics. At times, cryptocurrencies have outperformed stocks during trade war anxieties, prompting some to draw parallels to gold, but their behavior remains inconsistent. Still, as we hit all-time highs, there's a growing belief that the long-term value of crypto lies in its utility and its protection against inflation. The more practical and institutionalized these markets become, the more capital will flow into them. When it comes to Bitcoin's future valuation, there's plenty of speculation, with some, like the founder of Cardano, predicting $250,000 by year's end. Personally, while I doubt XRP will hit those heights due to its proximity to home and regulatory hurdles, I don't think $200,000 for Bitcoin is unrealistic. I'd estimate closer to $175,000. Many still underestimate the significance of the United States, with its enormous economy and dominant asset managers, transitioning from resistance to support for crypto. That shift, combined with smart, innovation-friendly regulation, could make all the difference. Ultimately, it's the utility of platforms like the XRP ledger that could elevate XRP to the next level, and that's where the real conversation should focus. Binance has recognized this as well.